Welcome back. You're still tuned into Power Breakfast. We were just going through the global setup, and there's lots for us to really talk about. But let's now also talk about how all of these cues really impact our own markets, everything that you should track before the market opens. So we have Ekta, Nigel, as well as Surbi all here with the trade setup. Guys, a very good morning to all of you. Ekta, let me come to you first. The handover has been a bit weak from the global markets, but what should we track this morning?
Thanks for that. Well, yes, yesterday was a rough ride on expiry day. We have a fresh series starting today. Yesterday, the Sensex fell 440 points. The Nifty also corrected over 100 points. The Nifty bank fell nearly 1% and the mid-cap index managed to outperform. We saw a big sell figure which really came in from the FIIs yesterday. The DIIs, however, net bought around 2,500 odd crores. The global action earnings continue to dominate in terms of sentiment. So we had the US markets, which ended lower. They snapped that 13-day rally for the Dow. Strong meta earnings, better Q2 GDP data. None of it enthused the markets by the close of it. European markets, ECB has hiked rates. Asia is largely weak. Bank of Japan is going to be in focus on account of the discussion of long-term rates. So that is something that the markets will watch quite closely. We've seen Brent crude as well as other commodity prices spike up simply because of the stronger than expected GDP data from the US. That is definitely a negative for the Indian markets and something we need to watch for. The GIFT Nifty indicating a soft start at this point in time. Earnings continue to be in focus. Stock-specific action continues to be in focus. For example, Bank of India, IOC, DCB, Equitas, Small Finance Bank, Exide, M&M Finance, a whole host of numbers coming out, especially from the broader markets. So a lot to watch out for. Do watch out for Brent crude prices as well as the action from the Bank of Japan.
All right, got that. Those are all of the cues that we should watch this morning. But Surbi is also here with the entire list of individual stocks that you should keep on your radar and all of the important news flow that came through post-market close yesterday. Surbi.
Good morning. So first on my radar is BEL. Now the revenues were up 13%, EBITDA was up nearly 30%, margins came in at 19% versus 16.5% same time last year. Indian Hotels, a good set, revenues up 16%, EBITDA up 9%. Intellect Designs, revenues up nearly 4%, EBITDA up 8%, and margins came in at 23% versus 22% same time last year. Sona BLW, revenues up 25%, net profit up 48%. Indus Towers, revenues up 2.6%, EBITDA up nearly 31%, and margins come in at 75.5%. JK Lakshmi Cement, a weak set of results, revenues at 1,633 crores versus a poll of 1,660 crores, volumes at 2.9 versus 3, and margins at 10.28% versus a poll of 13%.
All right. Thanks for taking us through that entire list of stocks, Surbi. Finally, it's over to Nigel. Nigel, it's the start of a new series. Take us through what we should watch.
Well, morning, Pavitra. We got a troika of problems today because you have the US yield that's up close to around 4%. Brent crude prices are around $83.50 per barrel, which is a negative from an India perspective. The dollar index at around 101.7, so troika of problems. But the Nifty, well, we are aiming at the fifth straight session to a fifth straight series to end in the green. Remember, the last few series has been quite good, and the chart should come up for you on the screen. We have been on a winning streak, last 4. So let's see whether or not we can make it 5 in the row. Now, in terms of the open interest, the Nifty open interest, well, it's 35% higher in comparison to the average of the last 3 series at the start of the series. That's telling you the rolls were higher. So let's see how this goes. It's a far heavier Nifty open interest that we're looking at. The FIs in the index futures, well, they continue to remain net long with close to 59% of their positions on the long side. However, they're not as long as what we saw at the start of the previous series. And even in terms of net long positioning, well, it's at around 33,000 contracts. Remember, just a couple of weeks ago, we were at 1 lakh contracts. So that's come down substantially, telling you the FIs have some more shots in the system, which, as I always say, is not such a bad thing. The Nifty options data, well, we have the highest open interest at around the 19,800 put and the 19,800 call. And both those two open interests should come up for you. The PCR at both these two strikes, well, if you look at the PCR, it's at around 0.55. Telling you the call writers is far more than the kind of put writing that we're seeing at that strike. Which brings us to the levels then. On the downside, you're looking at support at around that 19,555. That's a 20 DMA. While yesterday's low is another reference point at around 19,604. on the upside, since the 19,800 call has a fair bit of open interest, 19,900 becomes a bit of a resistance zone. The GIFT Nifty, well, that suggests a start in the green. Let's see how this goes. Yesterday, we had a bit of a downtick in the final hour of trade because of expiry-related factors. This morning as well, we open up with a cut-off close to around 60 points. The 19,600 mark needs to hold. The bulls will be happy going into the weekend. Back to you.
All right, Nigel, thanks for getting us all of those cues. So let's see if the bulls are happy going into the weekend or not. But for now, we do need to get into a short break. On the other side, we're going to shift focus to the world of commodities. There's been a lot of action there as well, with crude rising above $84. So stay tuned for that.